Hello, everybody. Welcome to your weekly market update. We've seen one of the craziest week in mortgage-backed security trading and interest rate swings within the last 3 months. It started on Wednesday. We had the Federal Reserve Board meeting, and as expected, they did increase the federal prime rate by 0.25%. That was expected. Everything and everybody was looking at what their comments were. And they had some good comments. They were still what's called hawkish, meaning tough on interest rates. They're trying to stomp out inflation. Many of us think they're going too far, like myself, and there could be a softer landing. But their main goal here is to stomp out inflation. And they did have some comments that said what they're doing is working. That's the first time they've really opened up to that. So the markets, as I'll show you, reacted very positively to that talk. So this is Wednesday. This is the run-up. And this is Thursday, the day after it. You can see the L is where we locked people. So I just want to show you our expertise, our level of training, our level of just following of these mortgage-backed securities. So many of our clients came to us during these times. While other lenders were recommending in locking in rates, we were recommending floating. 8 people out of the 16 that we currently have in process got over 0.5% better in interest rate than where they started due to my advice. So how we work is we show you the rate. We promise that it won't get worse than that we'll lock that in if we see the markets deteriorate, but we recommend floating. 99% of mortgage loan officers out there don't understand these markets. They don't follow them. I have a finance degree, not to my own horn, but I had a 3.6 GPA studying this. I've followed these markets for 20 years, and I've traded these markets with millions of my own dollars. So that is where this expertise comes from, along with a mentor that I've followed for 20 years. So we had a great couple of days there. We locked everybody in here before Friday's jobs report. Now, the Friday's job report purely just smelled, and it reeked of manipulation. It reeked of inaccuracy, and I'll show you why in a second. So here, interest rates almost increased a full percent within 1, 2, 3 trading days. They dropped off a cliff. Now, why would that happen with such a strong jobs report? Remember, the main goal of the economy right now is to stomp out inflation. So when inflation looks like it's going to hang around, the markets, especially bond markets, which are treasury bonds and mortgage-backed securities are what determines interest rates, not the Fed's policies. It's an open market that gets traded every day. That's what this chart represents. So when we see a drop off like this, it's because the markets are looking at the headline number. So let me pull up the headline number for you. And there's what's called the BLS report. So there's 3 main jobs reports that come out consecutively. ADP, who is a payroll service, uninterested third party, no way to manipulate it. It's its own business. I'm sure somebody could manipulate it, but they came out with 106,000 jobs reported for the month of January. What we feel is the accurate number. I always follow the ADP. I feel it's much more accurate. There's the BLS number. That's what the markets, that's what the Fed looks at. They claimed 517,000 new jobs created in the month of January. The markets were expecting 185,000. Now, if inflation wasn't such a concern, this would be a good thing for the markets because it shows strength in our economy. But and also the previous 2 months are revised, right? So they go back and their estimate turns into actual, right? Well, obviously, we just had a State of the Union. Who knows what manipulation goes on behind the scenes, and that's not a political statement, but this report just reeks to me. So when you look at the job gains, there's also the household survey, right? And that report was even bigger, of 894,000 jobs created. But here's where people don't look in. The traders look at the headlines. Individuals look at headlines. Businesses look at headlines. We need to dig deeper into the data because data when enough of it is reviewed, cannot be manipulated if you really look deep. Well, what smells is 606,000 of these jobs were part-time. So is there really that much strength in the economy? When we hear Amazon, Salesforce, Google, Facebook, all these companies having massive layoffs, it's happened in our industry a ton. It just doesn't feel right, right? So let me pull you to another number. Just bear with me a second. Sorry, I don't know why this is. So this is my mentor that I get most of this stuff from. Now here is where the stink is, right? There is what's called a population control effect. They don't know how much more population has come into our country. They don't know how many have left. So they make up this estimated number, and it's 810,000, right? So what we really see is after you remove the population control effect, not 500,000 jobs created, 84,000 jobs created. This is the number we need to look at. So it just reeks of manipulation, of data moving around in spreadsheets. I believe we'll see a revision in the coming months that shows this job report was not as strong. So what does that mean to you? That means that work with someone like me that knows when to lock in your interest rate once you're under contract. You do not need to lock the second you're under contract. Mortgage loan officers just do that because they bear all the risk and they don't have the knowledge of these markets. I do. We pay for this service. I have followed MBS Highway and Barry Habib for 20 years. I trade these markets myself. I have a finance degree and just have studied these markets, gosh, for 25, 30 years. So work with an expert is the key to all of this. And let me just show you one more thing that just proves these points. So the average hours worked is up a little bit, right? So hourly earnings has increased. So this is the only number to be concerned about. I know it sounds terrible, but we don't want job growth. We don't want wages going up right now. We want the Fed to be more accommodating and to not have interest rates so high, so there is more money circulated and businesses can borrow money at a cheaper level. That is what's going to improve our economy. So what's that mean for your housing search? That means that I think these are the best prices that you're going to see. We're seeing a lot of demand despite the fluctuation of interest rates. We're still seeing deals happen, but we're also seeing many go over list. I think this buyer's market is quickly diminishing, if not already gone. And if you have to buy a home, you are going to be paying more. Interest rates will be cheaper, but there'll be more demand. So I think it's still a great time to buy a home. I think it's a wonderful time to get under contract and let me navigate these markets and lock you in at the best place. And remember, I'll always, after you make 6 payments, that makes me whole. That means I get my commission. I don't have to pay a penalty. If you do that for me for a year after that, I'll refinance you free of any of my costs. I don't need to make money off you twice in a year. So that's your weekly market update. I know that's a lot. These are the things we look at. These are why we're experts. It's so important to work with an expert and somebody that has been through these markets and can advise you on the best loan for you. We're doing a lot of adjustable rate mortgages right now because we're going to be refinancing when interest rates cycle lower to the 30 years. So why pay the higher interest now? You need to work with professionals that understand these things, not the order takers. They are desperate right now. They haven't been in this business long. They haven't experienced the cycles. I've been doing this for 20 years at a very high level. So we appreciate your trust on your pre-approval. Realtors who watch this, we appreciate your referrals. No, this is the level of care we put into your clients. Make it a great one. Call us if we can help you with anything. 312-731-4939.